Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to the video update that we're doing here for Monday, September 8th to kick off the week. Just as a quick reminder, I'm doing this video actually really quick after the market closed. It's about 20 minutes after the market's already closed because we have a huge webinar launching tonight, and I know that a lot of people were still trying to get in, but what I'm going to tell everyone is that although we are sold out on the live event, you can still purchase the recording of the webinar. You just have to buy it once because we're doing a recording doing a live session on Monday and on Tuesday night for the webinar, but we're completely sold out. We sold out last week on this thing, but you can still buy the recording, and what we'll do is we'll send you the recording of the huge webinar that we're doing tonight and tomorrow night. And I'm still prepping for that, and that's why I want to get this video done of the trades we've done today, because I'm still putting together all the slides for the webinar tonight. It's going to be amazing. It's going to be huge. It's probably going to go well over an hour for sure, talking about trade adjustments, how to manage the different types of losing trades, how to cut your losses, how to save profits, and all of the step-by-steps with a lot of real examples that we have going on right now of things that we've done in trades like Yahoo, which we're going to cover here in a little bit, and X and IWM. I mean, there's just a lot of real-life examples that we have, which is actually good because it becomes a teaching moment for everybody. And really helps out. So again, if you didn't get on the live event list, and I know that a lot of people did, but if you didn't get on the live event, you can still go ahead and buy the recording. You just got to go to optionalpha.com, and all the way at the top, up at the top, all you got to do is click the webinars link up there. All right, so trades that we made today on Monday to kick off the week. We had no opening trades, so everything that we did was closing and or adjusting. So I'm going to go through the closing orders first because they're a little bit more easy to get out of. And then what we're going to do, or get through, and then what we're going to do is talk about some of the adjustments that we made to X and to Yahoo. Again, going to use those examples a lot more in depth tonight in the group coaching webinar. So the first one that we got out of this one very early in the day is T, which is AT&T. So I know it was a little bit confusing because the ticker symbol is just one little letter, but it is T, and we sold back to the market our butterfly that we had bought a little while ago, and we had bought that butterfly assuming that AT&T would make a nice little rally, and we pinned it right at 35. So this is not a broken wing butterfly. It was a regular normal butterfly that we bought for a small debit, so it was a very small investment for us. And we were just hoping that at some point AT&T towards the end of September expiration was going to pin around 35. So that middle strike of this butterfly is really what creates that huge tall pyramid shaped profit and loss diagram, and we sold it back to the market today for a 43-cent credit. Made $19 on each of these. Again, not a huge profit, but with these butterflies, it is a good means to stay active in the market. And the reason that we got out of the trade was because the stock moved right to where we thought it was going to move. So it's still got about 11 days to go, so we still have left a little bit of money on the table, but at this point, the stock moved right exactly to 35, and short of the stock just staying right at 35 between now and expiration, we lose an opportunity if the stock goes higher or if the stock goes lower to capture the profit that we have right now. So like I said, very small trade. We want to just capture that profit and move on. The next trade that we closed out of is Facebook. So we bought back or sold back to the market our Facebook calendar spread that we had. We had bought the 77.5 call calendar spread. With these calendar spreads, if you remember from previous video tutorials, what we're doing is we shorted the front month and we bought the long month. So in this reversing order where we close out of it, then what we're doing is we're selling out of the long month or the back month, and we're buying back the September month, which is the September 77.5 call. Combination of doing those two things, since Facebook has moved decisively higher, which is good for our calendar spread, is we sold this whole calendar back for a 140 credit, so made a $41 profit on a one lot, which is actually fairly decent profit, again, staying active in the market. But you can see that Facebook has made a really nice move up in the last kind of 2 or 3 weeks, right towards our target at about 77.5. So kind of eclipsed that today, went to a high of 78.17, but kind of settled in right around 77.89. So again, moved right towards our target. That's what we wanted to do. We didn't see a whole lot of movement in implied volatility, even though these calendar spreads can profit from an increase in implied volatility. We didn't see a whole lot of movement in Facebook's implied volatility just because the stock is kind of floating higher. But that's why these calendars work so well in low implied volatility markets, because the stock can just float higher, float lower, wherever it's going to float towards your target, and you can make just a good, decent profit on just the spread between the two contract months. So I'm actually going to skip down and talk about the same thing that we did with the calendar and INTC. So exact same type of setup. We did the 36 call spread in INTC instead of the 77.5, and sold that back to the market today for a 50-cent credit. Made $16 on each of these, so a nice little profit on INTC as well. But same thing with Intel. With Intel, the stock just kind of floated higher. It didn't quite get right up to our price at 36. It's still got a little bit more room to go. But what you do notice is that implied volatility has increased on Intel. So compared to Facebook, which actually kind of moved right past our target at 77.5, Intel's still got a little bit of room before it actually hits our price target at 36, which is right up here at 36. But because implied volatility has risen, that gave us an opportunity to actually realize a profit a little bit sooner, even though the stock didn't make the exact move that we were looking at. So again, another example of how calendars in low volatility environments give you a couple different opportunities to make some money. You can make some money with not only the directional movement of the stock, but also with an increase in implied volatility. So these are two great examples using Facebook and Intel. Okay, so let's go back and then we'll talk about our debit spread in Ford. So Ford had a really, really rough day. Again, this one was a little bit tricky because there's only one little ticker symbol in there, and that's F for Ford. So we originally bought a debit put spread in Ford. We had bought the 17.5, 16.5 debit put spread, and we ideally wanted it to close somewhere below about 17. So that's the about the break even that we were looking at for Ford. And Ford made a pretty good move down today. So what we did is sold back out of all of our September options because they've only got 11 days to go. So we want to take this profit off the table. But we sold out of all of our Ford options for a 60-cent credit, realized a nice $22 profit on all four of these contracts. So it was a very nice trade. Again, being a directional trade, we had an opportunity to make some money. And really, with Ford, we really didn't get that opportunity until just about 2 days ago. So we really didn't get an opportunity. As you see, that Ford just kind of continued to stay higher pretty much the entire month of August and September here as we get closer to September expiration. But then just in the last 4 days, it took a huge nosedive. And so again, nobody really expects this. Nobody knew that this was going to be coming for Ford. And so by making this play and keeping ourselves small enough, keeping our position size small enough, even though it's 4 contracts, that gave us a huge opportunity to wait for this move down below 17, which is our break-even point, for an opportunity to take a profit. Because if you remember, all we needed is a move back down below 17 for an opportunity to take a profit. For pretty much the entire 3 or 4 weeks that we've been in this trade, we never got that opportunity until just today. So really powerful stuff here, this idea of staying small, keeping your position size small, being able to wait out the probabilities, let the markets recorrect themselves because they always do, and then you have an opportunity to take money off the table. Okay, so we covered all the closing trades, had a nice closing day, starting to roll out some of these or roll off some of these September options. We're going to be continuing to do that this week as things start to materialize in profits, either roll them to next month, to October, or start to close out these trades, win, loss, whatever the case is. So the 2 adjustments that we made today, the first one I'm going to go over is in Yahoo. So I really, really like this adjustment that we made in Yahoo. It was actually buying back our short call spread. So if you remember in Yahoo, we had originally sold the 38.39 call spread. And as Yahoo moved higher, we added the put spread below the market, and then we added another put spread below the market. And again, we'll go over a lot more in-depth details with this trade tonight on the advanced group coaching webinar. But with Yahoo moving higher today decisively, this actually gave us an opportunity to buy back this spread at less than max profit. So this spread, since it's $1 wide and completely in the money, because Yahoo's trading around $41 or so, at least that was the last I looked at it, but we'll check it out. I think it's above $41. Then this means that this spread actually at expiration will be worth about $1. So by buying it back today at 66 cents, we're actually buying it back for less than what we think it's going to be max loss at. And we're still taking a loss on this side of the trade. So don't get me wrong here. We're not taking a profit on this side of the trade. But by buying this back at max or less than max loss and leaving both of the short put spreads open, that actually leaves us a very good opportunity here to make a a little bit of money on Yahoo if it just continues to stay higher. Okay, so I'm going to show you what I mean by this. So let's first take a look at Yahoo stock. Obviously, you can see Yahoo made a huge move higher. Implied volatility at Yahoo now is up around 100, around the 100th percentile. So this absolutely brings a whole new set of opportunities on the table, which we definitely had some orders working today to get into Yahoo for next month, for October. But this gives us a good opportunity with our spread now to actually take the adjustments that we made and turn this trade into a profit, even though it went completely against our initial position. Because if you remember, our initial position is at 38 and 39. So this stock has gone 100% against our position. And now because of the adjustments that we've made, we have an opportunity to get rid of this trade or exit this trade at a profit at expiration. So what I want to do here is go to the risk profile tab of Yahoo, and what you guys can see what the new position looks like in Yahoo. So we originally had that 38.39. It originally created this kind of funky kind of iron condor butterfly looking trade. That's originally what it looked like. You can go back in the video tutorials and see it, but that's originally what this trade looked like before we exited it. So what we did is we took off this leg over here, this right side of the trade, because we can buy back for less than max loss, and that leaves us a very wide and kind of unbalanced a little bit put debit spread below the market. So those two put debit spreads, or put credit spreads, that we sold below the market, that leaves us short both of those below the market. But you'll notice that by taking off this trade, our break even to lose any more money on this trade between now and expiration is actually down around 37. So it's actually about 20 cents higher than 37. So we go back to the chart and you can see that this is a very good kind of starting to peel away this trade, because now our risk is only if the stock gets back down here around 37.20 or so. So a huge reversal is going to have to happen. Not that it can't happen, but it's going to have to happen in a very quick time period for us to lose any more money on this trade. Now, moreover, what we've also done is left enough room to make an additional $50 on this trade. So the difference, and this is a little bit more technical, but we've got video tutorials on this, but the difference between this white line, which is your daily profit loss line, and this red line, which is the red line at expiration or your win or loss at expiration, the difference between that is about $50 or so that we still have left in room to make money on this trade. So by exiting this trade early, we don't pay max loss, or we don't get hit with that max loss on the call spread, and we leave some extra room to make money between now and expiration. So really like this adjustment. I'll go over it much more in detail tonight on the group coaching call. All right, and then the next adjustment that we made, very similar to some of the first adjustments that we've made to X, but we went ahead and rolled up our put side up to the 40 strike. So that mechanically is selling a vertical spread, because a vertical spread, you sell the front contract and you buy the back contract, which is the 38s. We were already short the 38s, so for all intents and purposes, we have closed out of the 38s and are now left with the 40 short puts on the bottom side of X, which is US Steel. And so again, you can see the difference between buying back the 38s, selling the 40s was a 60-cent credit on each of these contracts. Again, we just added some comments here that we basically rolled up our short put from 38 to 40. If we go to a risk diagram of US Steel, you can see that now we have recentered the strategy by rolling these things higher to 40. We've recentered the strategy right over the market. This is where US Steel is trading, right at 39.50, and we basically start losing money around 38 and 40 if we make no more adjustments. So we're very even, very centered over the market. That was the whole idea. Before this trade was made, we had pretty much break-even points around 39.50 and down here around 38.50. So we were starting to get a little bit concerned because the stock has continued to move higher and higher and higher. By now making this adjustment, we recenter the strategy over the market, bank a profit because we originally sold those 38 puts for some value. Today we banked a profit because the stock has continued up. So that profit isn't reflected in this profit and loss diagram, but we did bank a nice little profit on that spread. So hopefully what we're looking for with US Steel is just the stock and really not to move between now and expiration. And we know that's not going to happen, of course. We know that there's going to be a little bit of movement between the stock and now and expiration. We do leave a small window, but with implied volatility as high as it is, we have an opportunity to slide with the stock either direction. So if the stock moves down, we'll roll our call side down. If the stock continues to move up, will continue to move up that put side, bank a profit, and keep recentering the strategy over the market. All right, so as always, I hope you guys really enjoyed these videos. I know this one was a little bit long, but I want to get into all of these adjustments. I'm super, super excited for those of you who are on the live event tonight for tonight's webinar. It's going to be jam-packed. Please get there on time. Get all of your audio and call-in number and everything ready to go so you guys are ready to go right at 8 o'clock. If you have any questions, let me know in the comments section. Otherwise, happy trading.